Hey, my name is Kingsley Fetty CPA, and I'm going to explain to you exactly how to pay yourself in 2026 if you have an LLC. So if you own an LLC and you're making money, but you're not completely confident that you're paying yourself the right way, this video is exactly for you. See, as a CPA, I see business owners every single year who think they're doing everything right, but they're accidentally overpaying taxes, hurting their cash flow, and setting themselves up for IRS problems. And I don't want that to be you. By the end of this video, you will understand exactly how to pay yourself as an LLC in 2026, and you'll understand when exactly you should switch from an LLC to an S-Corp and how you pay yourself as an S-Corp as well. So let's get into it. The most common misunderstanding. See, the first thing you need to understand is this. An LLC owner does not get paid like an employee. That means there's no automatic paycheck, there's no W-2, and there's no W-2 requirement by default. Instead, most LLC owners pay themselves using something called an owner's draw. As a CPA, I wish they understood before they made their first dollar. See, this is a big myth that an LLC saves you money in tax. And we're going to hop into why that's a myth and why that is not true. An LLC does not save you any money in taxes. It is just a legal entity, a limited liability company, and it's just there for legal liability protection, and it's not necessarily a tax vehicle. So let's hop into it. So what is an owner draw actually? An owner's draw is also called an owner's distribution. It is simply moving money from your business bank account to your personal bank account. That's it. There's no payroll involved, there's no taxes withheld, and it's just the movement of cash. In my experience, where most people get into trouble is when they stop respecting the separation between business money and personal money. The owner draw exists specifically to help you avoid commingling funds, which is one of the fastest ways to lose liability protection. What do I mean by lose liability protection? So in the case of litigation, and the court's trying to figure out who owns what, when they see that your personal assets are commingled with your business assets, you're using your business card for your personal expenses and vice versa, you create something called piercing the corporate veil. And in other words, the reason that you create an LLC now becomes diminished, right? Because you're not acting as if these are two separate entities, that you exist over here and the business exists separately over here. So we want to keep things separate. So how do you pay yourself step by step? Let me walk you through the clean, correct setup. Step 1, get an EIN number. Your LLC needs an EIN, an employee identification number. This is how the IRS tracks your business for tax purposes instead of using your Social Security. And you can apply for an EIN number directly on the IRS website. And it is free and it just takes a few minutes. An EIN is essentially the Social Security number for your business. This is what you use to open business bank accounts. This is what you use to file tax returns. So an EIN is essential. So that's step 1. Step 2 is open a business bank account. Next, you need a dedicated business bank account under that EIN. All business income goes into that account and all business expenses get paid from this account, right? So when you're at Costco, when you're buying supplies, make sure you pull out your business credit card instead of your personal credit card. This is step 1 to make sure everything is organized. This business account belongs solely to the business, not for you to be used personally. As a CPA, I cannot stress this enough. This one step alone prevents a massive amount of tax and legal issues. Step 3. Take the owner's draw. So now that you've made your income and you have expenses and you have a little bit extra to pay yourself, and the business has a profit and the cash flow to do so, you simply transfer money from your business bank account to your personal bank account. I recommend using a bank transfer or a check so there's a clear paper trail, and use good memos. You then record that transaction as an owner's draw in your bookkeeping. And this is super important that you or your bookkeeper knows exactly what's going on. Once that money is in your personal account, you can use it for whatever you want and take care of your personal expenses. How often and how much should I do an owner's draw? This is one of the most common questions that I see a lot. How often should I pay myself? The answer is, the IRS does not require you to pay yourself on any required schedule. You can take an owner's draw weekly, monthly, quarterly, or just whenever you want. The amounts for the owner's draw does not have to be the same every time. This flexibility is one of the biggest benefits of an LLC. But in my experience, Flexibility without discipline is exactly how you get into trouble. Businesses go out of business because of lack of cash flow. Don't drain the business account. Section 5. Why owner's draws do not reduce your taxes. This is probably one of the most important parts of this video. Owner's draws do not reduce your taxable profit. Let me say that again. It does not matter whether the money stays in the business account or goes into your personal account. The IRS taxes your net profit, not where the cash is sitting. As a CPA, I explain it like this. Taking the owner's draw is like moving money from your left pocket to your right pocket. The location changes, but the tax bill, or in other words, the taxable profit, does not. And this is why so many people get shocked by tax bills. They think, oh, I paid myself all the profit, so my taxes somehow should be handled because I have no profit. I'll reiterate it again. Owner's draw does not reduce your profit. Let's hop into self-employment taxes. I want to make sure that you really understand it. As an LLC, tax as a sole proprietor or partnership, you are subject to self-employment tax. That's an additional 15.3% tax on top of your federal and state income tax. The self-employment tax is comprised of two things: Social Security and Medicare. This tax applies to your net profit regardless of how much you draw out. And in my experience, the biggest mistakes new business owners make is not setting aside enough money for this. And the IRS will always collect its portion later. This is always paid on your tax return. The most common mistake I see as a CPA is business owners taking too much money too early. They forget about taxes. They forget about operating expenses. They forget about unexpected costs. Because businesses, as I said earlier, don't fail because they're not good, but because they run out of cash, right? So we want to make sure your cash flow is managed the right way. So now that you understand how it works to pay yourself as an LLC, and you understand a little bit about how LLCs are taxed, when should you consider switching from an LLC to an S-Corp? At a certain point, an LLC stops being tax efficient. In my experience, once your business is making a profit of over $50,000, it's probably time to evaluate whether an S-Corp is right for you. Here's why. As an S-Corp, you split your income into two parts: a reasonable W-2 salary, which is subject to normal payroll taxes, self-employment tax, FICA tax, whatever you want to call it, and distributions, which are not subject to Social Security and Medicare, or in other words, self-employment tax. And this is where the huge tax savings come from. What is a reasonable salary? Like I said, let's keep in mind, right? As an S-Corp, you get to split your income into two parts. The first part is a salary, and you have to pay yourself something the IRS calls a reasonable salary. As a CPA, this is probably one of the most understood areas of tax planning. Reasonable salary depends on your role, your industry, your location, your company's profitability, and a number of other things. Now, in my opinion, this number should be as low as legally possible, right? If your company is making $100,000 in profit, we want that distribution and W-2 split to be probably about 50-50. Now, like I said, it does depend on a number of factors what you have to set your reasonable compensation at. But I always say set it as low as legally possible. Now, I will admit, S corporations are not good for everyone. S corps come with added complexity, payroll requirements. You have to put yourself on payroll, so you have to get a payroll provider. You have to file quarterly payroll reports. It's more compliance, more accounting costs, and you have to file an additional tax return form 1120S every year. So it does have additional costs. But as long as the tax savings can justify the cost that it costs you to maintain it and keep your S corp, then it's probably a win, right? Because the tax savings can be very substantial. So in my experience, if profits are low, right? Like I said, typically under 50,000, or inconsistent, or you just don't have the savings to justify the structure, then an S corp typically probably won't be your best bet. So as an LLC, how you're taxed is as a disregarded MB. Meaning if you make $100,000 in business profit this year, what ends up happening is you pay about 15.3% in self-employment tax. So it's about $15,000 in this scenario. And you pay your normal state and federal income tax. So let's call it a combined 20%. you're paying about $35,000 in total taxes because you're an LLC and you made $100,000 in profit. But let's take the same exact example as an S-Corp owner. Let's say you make the $100,000 of profit, the same exact thing. And let's just say you take $50,000 as a reasonable compensation W-2 requirement and the other $50,000 as an owner's distribution. Now, on the W-2 portion as an S-Corp, you still pay the same 15.3%. So you still pay about $7,500. But on the distribution side, you don't pay any self-employment tax, saving you about $7,000 to $8,000 in this example. So instead of paying about $35,000 like an LLC owner does, in this case, as an S-Corp owner, you pay about $26,000 to $27,000. So save me about $8,000 in FICA or self-employment tax savings. Wow, just because you elected the correct entity. And so that's why it's so important to understand how these entities are taxed. So paying yourself correctly, it's not about tricks, it's about structure, timing, and planning. If you're not sure whether you should stay in LLC or switch to an S-Corp, that's okay. That's exactly what we help business owners figure out day in and day out. So if you've enjoyed this video, go ahead and click the link below. I've attached my guide to the 7 top tax strategies that everybody should implement this year. So if you found this video helpful, don't forget to like, comment, and subscribe, and share this with somebody that you think might need to hear this. I'm Kingsley Fetty CPA, and I'll see you in the next video.